Let's get into the numbers with Kevin Green and Nicole Petallides joining me, our team here. This is after the company already had a pretty big victory with the WWE Raw deal, which has a huge following. They reported free cash flow of $1.6 billion in the fourth quarter. They added 13.2 million subscribers, which seem to be pretty good numbers here. Global streaming paid net additions, 13.12 million subscribers. So it seems like they are continuing to build out their presence and scale and operating with a little bit better profitability. The operating margin of 16.9% in the trailing fourth quarter is well ahead of the expectation of the average analyst, which was at 14.2%. The EPS of $2.11 on 8.8 billion of revenue does look like maybe that revenue comes in a little bit light, but I'll double check on that in a second. Looks like to me this thing that stands out is the margins at 17% almost. I mean, for operating margin, Nicole, that's a really big beat relative to what the street was looking for.
I'm just overwhelmed by some of these numbers because I was looking at a couple of the analyst notes, and KeyBank in particular was being a little more aggressive with some of their numbers with high hopes for Netflix, and it looks to me that Netflix has beaten even those higher expectations. You know, sometimes we have whisper numbers, right?
Yeah.
And just with the 13 billion ads, and when I see the guidance here, with over the 9 billion, I saw 9.1 billion. That's what they were thinking. That now I see here it's 9.2 billion. It just looks like they have beaten on most of their metrics.
Yep.
And that obviously continues to show that even with the higher expectations from the likes of KeyBank, which has an overweight and has a 545 target that they raised the price target recently, you see it here at 492, that it has beaten that. Coupled with, you mentioned the WWE deal, we had everybody here today. TKO, Ari Emanuel was here, he's the CEO of TKO. Dwayne "The Rock" Johnson was here, he's now a board member of TKO. WWE Raw goes over to Netflix. This deal begins in 2025. It's a $5 billion deal. It's a 10-year deal. And it shows that Netflix is going more into live, paying less for content. And they are acknowledging that. They're saying that they're looking at live and sports and gaming and things like that because they could just pay out and they don't have to create the content themselves.
Mm-hmm. I think that's why the market likes it. Some of their own content has been expensive and hit or miss. They did hit above the average estimate for the trailing fourth revenue, which was 8.71. So 8.83 billion does get ahead of that. And I think their first quarter outlook is about in line. Street was looking for like 9.25-ish. They're saying 9.2. I mean, I don't think that's anything to really get worried about, Kevin Green.
Yeah, I think Nicole hit it on the head. I mean, at the end of the day, you are expanding margins and a lot of commentary around their ad tier. So that's actually one of the most profitable areas of their business. And they do plan on doubling down and expanding those margins for that particular tier. We also did see them beat the global net ads by a pretty large amount, around 20 million. Now, this is not the first time. This is like the third earnings announcement that you and I and Nicole have done where they've just knocked it out the park when it comes to net new ads. And really, you're seeing a lot of that growth coming from the Middle Eastern market, from the Asia Pacific markets, from the European markets. Now, the revenue per user is a little bit lower than what we see here in the United States or in Canada, but it's a nice little base. And at some point in time, they should be able to raise prices and be able to accrete the revenue that way here. I do show that they did guide a little bit light when it came to the revenue for Q1. I think that might be the only a little bit of a cause for concern. And the reason for a miss for the adjusted earnings per share is because of a write-down. They wrote down around $239 million for this particular quarter, which is not outside of the realm. I mean, we've seen that from a lot of companies. A lot of companies are trying to just get a lot of bad stuff off their books at this point in time, taking the hit. But let's see what they say on the call here. I think that light guide on revenue might cause a little bit more questions from analysts. Let's see how they're going to be able to turn that around and really focus on the margins rather than that top-line growth number.
All right. Yeah, I think that's the thing to focus on here is even more than the subscriptions, to be honest. Just the fact that they are operating at a higher profitability when compared to the peers there's like this still mystery, this great mystery overhanging so many streaming businesses on how they're supposed to make money, Nicole, and what they're supposed to produce and who they're supposed to team up with. I mean, the whole industry basically outside of like YouTube TV and it's kind of a disaster right now. So Netflix seems to cement its lead here, in my opinion.
Yeah, and Wall Street Journal's opinion. I actually wrote down a phrase that they, in the end of the third quarter, they had more than 247 million paying subs. Now we're seeing 260 million plus with a 12.8% year-over-year growth. And their phrase was a seemingly insurmountable lead over competitors.
Wow.
It's just, I just don't know how, Apple TV or even Disney. I mean, there's so much frustration from Nelson Peltz why Disney didn't have more foresight pertaining to streaming. It's just Netflix just has this monster lead, and I think that phrase really captures what's going on here.
I absolutely agree. And shares are going to reflect that leadership with a pretty big rally this afternoon. Let's not forget Texas Instruments. By the way, Netflix is still growing as they talk about growing at double digits, still going forward for the full year. So, I mean, it's not like they're done growing. It's just it's slowed down, and now they're making more money as their priority and their prerogative. Let's switch to TXN here. As the stock has really trailed. We talked about it this morning, Kevin Green. A little bit more of a cyclical name than some of the AI groundbreaking technology. What do you think is most important here? Their earnings are significantly lower than they were a year ago. The sales look like they also missed estimates. They're coming in around 4.08 billion. Street was looking for 4.12.
Yeah, I think right now, Oliver, is the guide, and the guide is looking pretty bad here, to say the least. And that's from what I see right now on the screen. They're looking at Q1 between 96 cents and $1.16 here. She was looking at $1.44, and the revenue between 3.45 and 3.75 billion. She was looking at 4.05 billion. So we had this conversation earlier. Do we see a little bit of a bottom here when it comes to these analog chips, and are they continuing to see weakness in industrial and automotive? It appears to be that appears to be the case here. So we are seeing it sell off here in the after hours. Let's see how much it actually does go to the downside here. It does have some tailwinds because of the fact that, once again, you're hearing some other companies that are saying that we might be seeing a little bit of a bottom, especially when you're looking at the automotive space. That's one. And then two, just from an indexing standpoint, when you're a part of the SMH or you're a part of the SOX, things of that nature, you have the tailwind of fund flows continuing to go in because of all of this hype with AI. So it's harder to really knock you down. So let's hear what they say on the conference call here. But once again, I think it's going to be an issue if you're talking about top line missing the estimates, bottom line missing the estimates. You still had that CapEx spend that nobody really wants to see. Let's see if they're going to double down and stick the course when it comes to this expansion strategy. Because right now, the market might not want to hear that right now.
Okay. It's just tough to live in the shadow of NVIDIA when so many of the other peers are also quickly clamoring to offer their own tech linked to new AI abilities. Nicole, it seems like Texas Instruments just kind of looking a little dated at this point.
This is TI, not AI, right?
Right, exactly.
Nobody thinks of Texas Instruments as AI, and that's part of the problem. I just don't really see it as a visionary in that particular area. Kevin mentioned the sequential decline that we've seen in automotive, and that's been problematic. Revenue decreased 10% sequentially and 13% from the same quarter a year ago. They talked about some of the headwinds and weaknesses, but did tout their business model and thought that they have a quality product portfolio and the benefit of the production that they're able to do. Now, on the other side of the coin, I will say some of the analysts talk about some of the cash that's waiting on the sidelines that could in fact benefit Texas Instruments going forward. But for right now, you're not really seeing that. And with a miss here on sales and some of the outlook, I think Kevin said was a little bit light, it just doesn't seem like a solid winner, at least in the next 24 hours, unless something else were to come out. I saw Rosenblatt had a 190 target, a buy rating earlier today, a neutral from Cantor Fitzgerald and a 180 target. But with this, I saw some volatility in the after hours on this name, and it was looking lower when we were talking.
Indeed. Going to maybe require some juice in the conference call. One to revisit in the morning. Thanks, guys. Nicole and Kevin Green, good look at the earnings here with Netflix. The highlight, of course, with a big rally in the aftermarket, above $500 plus more. So Netflix continues its epic comeback and transition into a profit beast and margin expansion